Hello and welcome to this video, and in this today's video we are going to see how you can consistently create returns in the stock market. Hi, I'm Harshit Mohan. I am a stock market investor and trader by passion. I am father of a lovely daughter, husband of a loving wife, and I'm also the founder of Peaceful Wealth Community. See, creating returns is a different thing, and being able to consistently create is completely different thing. And that differentiates a professional trader from an amateur trader. Every year, lakhs and lakhs of people enter stock market, but they are not able to sustain themselves for a long time, and they come out of the market very soon. And again, a next batch of people come, and then they also go out. So this cycle continues. But then there are certain number of traders who are there in the market for a long time, who are not part of this cycle. So how you can belong to that category where you can create consistent returns is what we will see in this video. So in order to create consistent returns, it is very important to understand that as a trader, you need to first of all understand the market direction. What is the current market direction? And accordingly, you should choose a strategy. Now the problem with most people is that, of course, not the professional traders, but the problem with the amateur traders, they learn one or two techniques and then they apply that technique in all kinds of markets. Or they know thousands of techniques and they apply each of those techniques in all the markets. That's even worse. So what is important is, first understand what is the market condition and accordingly choose one strategy, trust that strategy, believe in that strategy and use that. That is the only way to create consistent returns in the market. Now let us talk about what is the market condition. What are the different kinds of market conditions? So overall there are only three ways the market can move. Either it can go up, or it can go down, or it can remain sideways in middle. These are the only three phases of the market: bull market, bearish market and a sideways market, or you can also say it's a volatile market. So first of all, you need to identify, is it a bull, is it a bear, or if it's a sideways market. Now there are several ways to identify that. When market is continuously gaining heights every day, of course it's a bull market, you also know that. And when the stocks are coming down every day, you know that it's in a falling phase. But then being able to differentiate a sideways from a bear and a bull market is little difficult just with a visual inspection. I mean, just with the news or in absence of any indicator, it becomes difficult to identify the exact current phase of the market. So I am going to tell you how you can identify exactly what is the current market condition and accordingly you can use that strategy. So for identifying the market phase, I use this strategy called RSI technique. So if you look here, I'm having a look at I'm looking at the Nifty Bank Index, like Bank Nifty Index. So if you want to understand the market phase right now, go to the weekly chart of Bank Nifty. So I'm trying to identify the market phase of Bank Nifty. Alright, it is not that the Bank Nifty will give you general direction of the complete market. If you want to understand the general direction of the market overall, then you should basically check the weekly chart of Nifty. Okay, so let us check Nifty chart only. Right, so this is chart of Nifty 50 and this gives us a general direction of the overall stock market. So you change the time frame to weekly, and here you see I have used an indicator called RSI, Relative Strength Index. The settings that I use is 60/40 and input is 7. Alright, and now how do I interpret this chart? Let me tell you. So whenever the RSI value is between 60 and 40, it is basically an indication that market is sideways. Okay, between 60-40 it's sideways. If it is more than 60 it is bull market, and if it is less than 40 it is a bear market in that particular weekly chart. And accordingly you can apply your strategies, right? So I do all my techniques, all my strategies on bank nifty because it's very volatile instrument and it gives very good returns. Now what I do whenever I have to take a trade, first of all I look at the bank nifty. Okay, right now I'm looking at the nifty 50. Let's take bank nifty. So I come and open the bank nifty chart, weekly chart, and then I look at what is happening in the RSI. So in this particular week, if you see, right from this week up till this week, it has been in a sideways range because the RSI was between 40 and 60. So when it is in sideways range, I deploy my iron condor strategy, right? And in this particular week, it went below 40, which means it's giving me a signal that it's a bearish trend for that particular week. And in that strategy, in that particular case, I will deploy my bear call strategy. And likewise, in these weeks, you see the market has been gaining new heights. It's been in a bull phase because the RSI was more than 60. And in this case, I deploy my bull put spread strategy. Okay. Now you can choose your own strategies, but the key point to remember is you need to have at least 3 strategies for these 3 market conditions. Only then you can expect to be a consistent trader. If you deploy wrong strategy in a wrong market, you are doomed to fail. It's guaranteed. So that is all I wanted to share in this video. I hope that gave you some clarity. Now going forward, whenever you try to deploy your strategy, first of all, find out what is the current market trend, and second, what is your strategy. I mean, in what kind of market situation your strategy works. You need to know that, and then accordingly you need to deploy that. So that's all for this particular video. Thanks for watching. Take care and have a safe day.